Hi there traders and welcome to the daily recap show for yesterday's US session, which was Monday the 9th of January. This week is the last week that these reports will be completely free of charge. Next week we will be moving to a subscription based service. So if you'd like to continue receiving these reports, you can still sign up and come and join the Keyzone Traders community for free by joining and clicking on the link below in the YouTube channel to join the Keyzone service. If you do, please let me know how you get on with these reports and how you're finding them, and also come and subscribe to our YouTube channel. So on to the analysis of yesterday's session. So this was the S&P. These were the zones of reference that we had. We said that the S&P had reacted positively to the news out at the end of last week, which was the NFP numbers, and we were now trading around resistance at 39.08 to 39.16. We had aggressive support at 38.91 to 38.97, with further support at 38.72 to 38.78. If we saw a sustained break above the 39.08 to 39.16, we could see moves initially to 39.28 to 39.36. We could continue to see higher pricing over the coming sessions all the time we were above 39.08 to 39.16. So let's go and have a look at the S&P from yesterday. Okay, so we opened on the market here and you can see we got that positive bar there, but we didn't get the breaker. We actually then had a deeper retracement and then we broke up. So nothing really, although it worked, there wasn't really anything there for me in terms of patterns to be able to get in. If you had managed to get something in on a breakup there, that would have been absolutely fine, and we did move up into that 39.28, 39.36 zone that we said initially could happen. We then actually used 39.50 to 39.57 as resistance. We didn't really get any reversal patterns there, and it wasn't a zone that we was looking to actually trade from yesterday either, and especially not as soon as it was counter trend. We then did come off here. We did get a reversal pattern here. This would have been a valid trade as a sort of breakout or retest with us being positive above that 39.08 to 39.16 zone. Let's just have a look. I wasn't around to trade this myself. 39. So yeah, we probably just about got to our one-to-one profit target there to make that trade risk-free before we came away. So hopefully, if you had managed to get something in on that, that would have been a break-even trade. Again, we came back down. We've got another reversal pattern on the retest of this 39.08, 39.16 zone. Again, probably just about enough room there to make it risk-free, but not enough momentum for the upside there to really profit from it. So, a couple of opportunities, but not really anything great reactions to be able to make some good profits from it. We have now actually started trading back inside that 39.08 to 39.16 zone, so we'll have to see what happens in the European session today, whether this turns out to be a false break of that 39.08 to 39.16 zone and we see a bit of a retracement of this big move up, or if we get that break back above there, then we could continue to see higher pricing. So not a couple of opportunities there on the S&P, but nothing that I would have sat there would have said been able to make some profits. Hopefully both trades had enough of a reaction to make them risk-free, but not really to book any great profits. So that's the S&P. Let's go and have a look at the Dow. Okay, so these were the zones of reference that we had on the Dow Jones for yesterday's session, and we said yesterday that we had broken out of its range to the upside. We had aggressive support at 33,600 to 33,640, with stronger support at the breakout area of 33,450 to 33,500. Sustained breaks above 33,715 to 33,765 could see moves towards resistance at 33,840 to 33,890. So let's go and have a look at the Dow yesterday. Okay, so we had a similar story on the Dow at the open, where we got this really strong bullish candle breaking above the London highs and above that 33,715, 33,765 zone, which then saw that move into resistance at 33,840 to 890. Again, nothing really clear there for me in terms of being able to get in. If you had managed to get something in there, then that would have been valid. No reversal here from the 33,840 to 33,890 resistance zone. We did get some sort of acceptance above there, but when we retested, if we'd got a continuation off of the moving averages here, that would have been a valid entry, but we didn't see that, and we actually ended up breaking down. This one here, we did get a reversal when we retested the initial resistance at 33 715 to 33,765. However, having reacted from that 33,840 to 890, it is a little bit risky. This one, I think, unlike the S&P, this one hasn't got enough room to have made it risk-free. I think if you had taken this trade, it has, like I say, it has got its validations because it is from what would have been initial resistance turn support. And we are overall bullish in the market at the moment, but having reacted from the resistance, potentially that's a little bit more risky. This one would have been a losing trade. And then we came back down and just chopped around a little bit towards the end of the session. We've come back and we've tested that 33,450 to 33,500 breakout area. Again, nothing really there in terms of reversals to get some support. So a little bit of a choppy session, a couple of signals on the American markets, but nothing really with any follow through to actually really profit from, unfortunately. But I hope you find these reports useful. I hope they're keeping you safe in the market. Please let me know how you're getting on. Hope you had a great start to the week, and I'll speak to you soon. Cheers.